Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
You're watching the most vicious and downright dirty stock picking show on television. This is Share Shootout League right here on CNBC Africa, first in business worldwide. I'm Bruce Whitfield. Now, is it true that the former African Bank Chief Executive Leon Kokinnis is at home right now playing Tom Petty's Free Falling on repeat? Was it the final countdown? Was Tom even petty? And why, oh why, is the South African government using chicken to sweeten a goer? Now, we don't know the answers to any of these senseless questions. What we do know is that the Share Shootout League gets tighter at the top and increasingly meaner on Twitter. As you can see from the results as to how Twitter decided last week, Gary, the running dog, is the runaway groom. He's in the lead again. He is now on 12 points. He's 3 points clear of his nearest competitor. Everyone on 6 points and 9 points at this time is still in the game. The bottom is beginning to look just a little bit desperate. We have to look at Chris, the Scot, Matthew, Shytown. They're still going for it, but right at the bottom, that's the one and the good guy on a big fat 0. Remember, you decide who wins this match and ultimately who wins the league. You just follow at SSO League. You tweet any of the stock pickers hashtags. We don't ask you why you vote. We don't ask you how you vote. We just count the votes. We don't take the blame. That's the way it works here on Share Shootout League. Back to the game at hand, and this is not deja vu. I repeat, this is not deja vu. This is not deja vu. It's Groundhog Day. Our first stock picker thinks that he's on a roll and he's back for more glory, or more glory, because he's got a bit of a cold. It's man flu, but let's hope he survives for the next half an hour. He goes up against a man who chooses money management over practicing the law. Let's have a look at the players.
It's easy when you do it live because then you just keep flowing. Eh? My name's Lavan Gopaul. I'm the CIO with Trademark Futures. Because we're a futures trading house, a lot of it is trading single stock futures and the index. We try and be as swift as possible to get in and out of the market. So we look for gaps both up and down to take advantage of these moves for our clients. The game plan, it's a poker game, so you've got to keep a poker face, and we're going to be armed with all this knowledge and research, and we're going to be playing our strategy very close to our chest. So I think it's mainly a knowledge base more than anything. The biggest competitor's got to be Bruce Whitfield. He's always putting us on the spot and he steals all our limelight. I definitely think we've got a very good chance of winning the game. It's like playing poker. So we've got a very good knowledge of the market. We know all the stats and we know when to hold them and when to fold.
My name is Ramathibela Smith and I am the Chief Investment Officer of Kumba Investments. My investment philosophy is keeping to the fundamentals of investing, so keeping it simple and straightforward, stick to the basics and make sure that you create phenomenal traction from that. My game plan for the league is to make fun of everybody else and make sure that they get embarrassed at the end of the show so that I can win simply because I get public preference. My biggest competition in the show, and it has nothing to do with investment philosophy at all, it would be Gary, simply because he's tall and big and I'm terrified of him. I don't stand a chance. I'm going to win the league because I feel that I've got the right criteria and the right material to make sure that I win the league. I qualify better on the BEE scorecard, so I hope that will help.
So who will dethrone Nick, the value guy, from his perch? Clive knows that he can knock him off the top of the heap, and Lavan wants his first 3 points. Who will win Twitter's favour? Hashtag the good guy or hashtag KLive? Time now for the house rules. These guys have each picked 3 shares. Only I know, because I've got the secret tablet, what their poison is. During the show, they must each accept at least one of their competitors' picks. They've got 30 seconds to argue their stock pick, and they can choose from the JSE. They can also choose from a bunch of international indices as well to pick from around the world too. An offshore allowance, if you like. We've set the pace. Let's start the race. Should we pick on the sick guy, Lavan? Should we make him go first?
I think let Clive go first.
I think we should. I think we should do exactly that. Clive Ramathibela Smith from Kumba Investments. I like this. You ain't chicken. You're somebody's brother. Astral Foods in 30 seconds. Tell me why.
It is brilliant business. I just looked at the numbers that they've just produced recently right now. These guys are producing 4.1 million chickens a week. And on top of it, not only that, the price to earnings ratio is quite very good. sitting at about 11.13. So that's that's good value. You also have to look at the value of assets. They've been having a good structured cash management system, and that makes them very, very attractive. And I like the fact that there's always cash available in this business.
Okay, your 30 seconds are up because I've been counting in my head because the clock started a little late.
Enough.
So boom, your time is up. We don't like to cheat about this, Lavan. Here's an interesting one, because this time last year you could probably have picked up Astral Foods for $80 before Rob Davies went in and said, stop bringing in drumsticks and wings. We want local producers to have an advantage. You could have got it at 80. Now he wants us to pay $120. Yes, it's cheap. Cheap. But would you buy it, Lavan?
So firstly, I'm not interested in this sector in particular for a number of reasons. There's a question of imports, which you've alluded to, and that might threaten local producers. There's also fluctuations in terms of feed price. So you've seen grain prices shoot up to alarming levels at the beginning of this year, and in all likelihood, with weather anomalies and other issues, I think you're likely to see grain prices reach for higher limits again.
The maize price is half of what it was in February before the production numbers came out. It went from like 4,000 Rand a tonne down to about 2,000 Rand a tonne. Now that hurts their feeds business. It hurts the margins in the feeds business, but it does mean feeding the little blighters for 31.3 days. I think that's the average lifespan of these poor things. It becomes cheaper too.
Which, by the way, they produce themselves. So
you know what? You know where they get the strain from? There's an island off the north coast of Scotland with laboratories where they produce hybrid chickens. It's science fiction stuff. And we eat it. But that's another story altogether. To get the hybrid quality that they need, it's fascinating, the science behind it. Absolutely. So yes, this is their own strain of bird. It converts food to weight very, very quickly and allows these things to be hatched and dispatched within 32 days.
Absolutely. And the nice thing about one thing you cannot put against them is the fact that...
Is that your phone? Somebody trying to get hold of you in the middle of the night?
Someone's trying to get hold of me.
Well, why don't you switch that off while I talk to Clive? It's okay. This is live television. These things happen. So, I mean, Lavan, would you take it or would you shoot it down?
So I'll shoot it down. High feed costs, and of course, you've seen feed prices come down, but I think that in all likelihood, grain prices can be higher. You've also got issues with all sorts of dodgy meat in different pockets of the world. So I don't know if people are going to be that happy to consume products.
Oh, come on.
You're probably going to have a lot more regulation.
When last did you go into Sandton City at lunchtime and you look across the fast food counters?
I mean,
I feel like
from
John Travolta.
A regulatory point of view,
Absolutely.
so costs are going to be higher. They're going to have to put a lot more.
They've got pricing power. Protein, chicken is the most widely consumed animal protein.
So as a good vegetarian, I've got to knock it down.
You've got to shoot it down. If this was a turkey shoot, well, turkeys can't fly, but he blasted out of the sky. You're shot down on that one, I'm afraid, Clive Ramathibela. I like the Astral story. The chief executive is remarkable, and we did have the chief executive and a chicken live on Tonight with Bruce Whitfield as well. At one point, the chicken walked around the desk. It didn't like the chief executive of Astral very much. I don't know why. Anyway, something about cousins or something along those lines. Right, Lavan Gopaul from Trademark Futures. I am interested in this particular pick. It's bludgeoned, it's battered, it's broken, it's bruised. It's got a new management team in. It was the subject of a long, hard, fought-over battle. Brian Joffe and the Public Investment Corporation control Adcock Ingram. They've recently had a trading update. It looks like they've taken the kitchen sink and they've bludgeoned every single division within Adcock Ingram. And this could be a new beginning. 30 seconds.
So Adcock Ingram was the center of a corporate battle. As you pointed out, it was Bidvest, CFR, the Chilean business, PIC, all bidding for this business. Obviously, there was value to be had, and it was something of a cash cow. Now, with new management and new ownership in substance by Bidvest, I think this is a cathartic move as they try and throw everything out, start from a new slate. They're talking about lumping in all the corporate costs at once. Anything that looked questionable on the balance sheet is thrown out.
There we go. Now, Clive, I mean, you're a sick guy. You understand what it's like to be sick. You could take a Miprodol and you'd feel better. It's made by Adcock Ingram. They've got fantastic products. They lost, and I've got to say this just to show off because I can, and I practiced a long time. They lost the right to produce Synap Forte, of course, because dextropropoxyphene, the active ingredient, that's the tricky word, incidentally, was banned in the United States, and they banned it here. They've had lots of troubles. Is this a new beginning for Adcock Ingram?
No, it's not. It's not a new beginning. I think that most of the management is still there that was there with that Chilean group disaster, which I thought it was. And I would rather go for something like an Aspen, which is more reliable, rather than go for them. So I'm
But why
not
pay
convinced.
super high full price for global exposure when you can get an asset under new ownership at a considerably lower multiple?
Simply because of the fact that if I want to go into a market like the pharmaceutical, you want somebody that's got global ground. So I'd rather go for an Aspen, which I know is much better in terms of value. And besides that, the cash management is very strong from the Aspen perspective, and I'm not convinced that these guys, maybe in the next 5-6 years, perhaps maybe that then, but for now, definitely not something I would do.
Lavan, defend your patch.
Okay, so I believe that they have a number of global lines and they're looking to pump into other areas of the world. They're looking to acquire new lines as well. They have fresh cash available because their balance sheet, income statements start to look strong post this period. Remember, it's a 9-month period that we're going to be reviewing at the end of August. They've already told us the earnings are going to be bad. So you know that it'll be a clean slate. That last quarter is going to be crucial. And you're buying this at a PE of 8, 9, maybe a forward PE that looks even healthier. So I believe it's a big plus.
Okay, you like it, you don't, Clive.
They don't have
you're picky on your medicines.
They don't have a manufacturer in India producing drugs at half the price.
Yeah.
So
They don't, but does it matter?
It does matter.
At this price, does it matter?
It does matter. Price does matter to me.
Price does matter. That's why it's cheap.
Yeah, but
Cheaper than cheap.
exposure as well needs to go with the price. So
You're shooting
that's
it
what's
down.
important. I'm sorry, I have to shoot it down.
Don't apologise.
No.
This is mean. You don't
No.
apologise
I'd rather
if you're
use-
playing Share Shootout League.
Right.
You go in for the kill. You go for the jugular. Adcock Ingram is shot down, I'm afraid, Lavan, as was Astral Foods. Let's move on to stock pick number 2 for you, Clive Ramathibela Smith. This is an interesting one. It's not one that we've had on the show possibly ever, which makes you something of a trailblazer. Merafe, 30 seconds. Tell me why.
Very, very strong management. If you think about it, natural fact, since they started about 9 years ago, they still have a lot of guys from Glencoe, Astral, who are supporting them in terms of management. And the fact that they're in a metal that produces steel, which is still a major, still have a major demand, especially in China and the rest of the emerging markets. I think this is one particular company that you want to go into. Pure black, supported by a number of high senior management from the mining sector, and it's been running at a very good price at the moment.
Do you like Merafe?
So I like the business, I like the sector that they're in, I don't like the company. It's a
Why?
small
Hold on.
cap.
You like the business, you like the sector, you like what they do.
It's a
but
small
you-
cap.
So
if they were a lot...
So was Anglo-American
Yeah.
100 years ago.
Yeah. So when they do become an Anglo-American, then I can justify advising clients to get into it. But while it's a small cap, it's under a number of risks. South Africa is noted for labor issues as well as capital constraints. So if it was someone like a Kumba or an Anglos or an Amplats looking for cash, the doors are open. Smaller capitalized companies struggle to have cash. The talent and skills on that board may not be as accomplished as some of the larger caps.
Defend that, Pat.
Relative earning ratio, 1.2. Relative safe ratio, 1.39. For any business to be able to consistently provide you with that security in terms of investment projections, it tells you it's a solid business. So, besides, you have to like Mr. Merafe, you have to like his experience in the sector, and he's contributed a lot to it. So I still think that the business, the model that they've chosen, because they're not participating in any other thing except for steel. So that for me is very important.
Okay. Is it a steal or is it something that shouldn't be bought?
So I would give it a miss, and as it graduates to maybe a larger level, a larger market cap, maybe in 3 or 5 years' time, we could look at it. And it's not our business to find the new diamonds in the rough. In terms of...
But you acknowledge
plays
it
that
could be. You acknowledge it could be.
I think it could be. I think there's a possibility.
It's too small
but it's
for
too
your appetite.
junior for us at
Okay,
this
well,
stage.
fair enough. Okay, but are you shooting it down on that particular front? I think it's a weak argument, but that's just me. Okay, it's an interesting business. Let's go then, Lavan Gopaul, on to yours. Oh, look, you've name-dropped this one already. In 30 seconds, Kumba iron ore.
Okay, so you've seen declining iron ore prices, and you've seen the iron ore price scream to record highs in 2012, 2013. So a little bit of a humbling on the prices affected Kumba Iron Ore, one of the largest contributors to Anglo PLC's financials. They're a business that has now signed a very important contract with ArcelorMittal. So you've got offtake agreements that are going to benefit them. I think it's well run. I think it's well managed, well capitalized, and whether it's a rand that weakens or stronger commodity price, you got to buy Kumba.
I do have to ask you a technical question.
Yeah.
ArcelorMittal or ArcelorMittal? You seem to have some inside knowledge on this.
I think you can pronounce it either way. We'll have to ask the Mithals for their...
But you say Mithal. Okay. I take him at his word on that particular one. Right. Kumba Iron Ore, it's an interesting one. It's been through tough times under new management, of course, with the chief executive of Kumba Iron Ore going off to Anglo-American Platinum. Boy, does he regret that day. What do you make of Kumba Iron Ore?
I must say that I've not been impressed with the management, and we know a poor lady had to leave and join the JSE because she couldn't handle it anymore there.
You're talking about Nonkululeko Nyambezi Haita, who was at ArcelorMittal, not Kumba Iron Ore.
Oh, right, Kumba.
But she ended up in a big fist fight, however,
definitely.
with Kumba Iron Ore, which they seem to have won.
Seems to have won, but I do like the story of iron ore because I still think there's going to be a lot more work into that. And I don't know why BHP for this particular moment is not playing much harder into that space. But I think opportunity for companies like Kumba is that they can actually exploit that and then create business. So
okay. You're not wild about management right now, but you like the business, you like where it's positioned.
Yeah.
Will you take Kumba Iron Ore, or will you risk going to the next one?
I think I can live with Kumba Iron Ore.
You're taking Kumba?
Yeah, I'll take
okay,
Kumba.
we're not going to argue about it any further then, so let's move on, because as we get to the next part of the show, we've got LAVAN'S next pick, which the chairman says is a lousy share. So who'll be left embarrassed and who'll be left feeling the freshest? The good guy or K-Live? Don't lose muscle. What one? See you after the break. You're watching Share Shootout League, the only league without extra time. Remember, this is match day 16, and by the end of this match, the league will not look the same. Let's go through your Twitter votes, and you look at these stock pickers, and you see how can they change the look of the league. Well, the way you can influence it is by following at SSO League on Twitter. And this evening, what you do is you vote for either the good guy or K-Live. Let's have a look at what they've chosen so far this evening and which way the voting is going. Lavan Gopaul from Trademark Futures has gone for Adcock Ingram and Kumba Iron Ore. Clive Ramathibela Smith cautiously accepting Kumba Iron Ore, even so, though he has some reservations. And then Clive himself, Ramathibela Smith from Nkunzi Investments, Astral and Merafe, both shot down in flames. Let's get on to the final stock picks. Now, this is interesting to me, Lavan Gopaul, because you're going for the most hyped business in the world, which is, it's not Apple.
I have no idea.
Excellent. The chairman of this company says his wife should sell the business and invest 90% of the money in index funds. The company is? You need to read more, guys. His name is Warren Buffett, Berkshire Hathway. Even though Warren Buffett doesn't like it very much anymore, as an investment prospect, you do. Tell me why in 30 seconds.
So Berkshire Hathway has got an excellent track record, exposure to some of the largest financial services, food and beverage businesses and consumer businesses on the planet. It's run by the third wealthiest man, Warren Buffett, as you mentioned, but most importantly is cash heavy with $55 billion US. So at any point, they're likely to throw out in excess of 30 billion for companies that they believe offer value, and I think they're scanning a long list of potential, full stop. Okay, Clive, now I don't want to be ageist here, I really don't want to be, because the two guys that run this business, Charlie Munger, 90, Warren Buffett, close to 90, are not going to be there 20 years from now.
10 years from now.
Okay, 5. But these guys have got a limited lifespan at the helm of their company. They are the driving force in their company. They've tried to bring outside management in the past, and those relationships haven't worked out. Isn't that the biggest vulnerability that this awesome business faces?
Yeah, because of brand versus business. If you are bigger than the brand, then it seems like your business will follow what you are instead of actually buying into the actual business. I think the market, the business is saturated, I'm afraid. I think
if you're sitting on $55 billion in cash, you can't apply that cash because there is no value to be had.
Where do you go? You can buy the entire Nigerian stock market.
But they're not going to do that.
No, they're not. Because of liquidity problems. Exactly. So the other thing is that I'm very disappointed in the good guy. I think now he's been a bad guy because you can't go and play on an international market and go for the most biggest global brand, Berkshire. It's unheard of. So I'm very disappointed with that, and that's why I'm shooting it down.
It's become personal. Okay. At this point, we've got to have the slow-mo. And as you say, I'm disappointed in him. And Lavan's got to look at you and go, and there's got to be like a boom, boom sound, and he's got to be devastated. And then we go off camera, and he goes, "I can't believe he said that about me." But we don't have the production budget for that, so I'm just playing it out.
If I can speak to the succession issues, yes, these are leaders of the business for 40+ years. They do have a team that assists them. The business consists of at least 16 large components, and in a variety of different ways, at least another 120 substantial companies. Those 16 big components are run by formidable teams, and they're not likely to exit.
The arguments are strong. He, however, does have the final word, and he shot you down on that one, Lavan. Okay. So we shot down on Berkshire Hathway, which I find courageous, to say the least. Ramathibela Smith, because we go into your final pick. You've been shot down twice this evening. This is a business started 30 years ago by a young guy who came to South Africa on a 2-week holiday. He arrived at Jan Smuts Airport, as was then known, jumped on a bus and went to Hillbrow because he was told that's where the cool and funky kids hang out. EOH Holdings is as a result of that. In 30 seconds, tell me why you like it.
I like the sectorial diversification, the fact that they're in education, they're in technology, and also not only that, but in consulting, which is the servicing sector, which they're doing relatively well. EOH keeps being innovative. Every time you hear about them, the newspapers have got new programs now. Now they're supporting government in terms of creating these hubs where young people can go and actually participate in educational programs that will help them to be sufficient. And I think that the management has been very, very good. They've got a relative
Okay,
rich.
now stop, pause. I wanted to stop you immediately.
Oh, right.
Because you're basing your investment decision on newspaper reports.
Oh, no, but
okay.
Look at the numbers as well.
Oh, good, thank goodness.
Look at the numbers.
You did say when you look at the newspaper, they're doing so many wonderful things.
Yeah, but they are doing wonderful things. You can't ignore them.
That's fine, but you're paying a lot of money for those wonderful things.
Of course, it's 21.
Okay. So,
how much? 21p.
21p.
Yeah, 21p.
So typically, this is not something that's within our spectrum. It's not a large cap derivative that you could get easily, and you shouldn't be playing derivatives over the mid caps or smaller caps. But it's by choice. I'm forced to take EOH.
But when you look back
as a model, it's been successful. It's delivered earnings. It's innovative in its reach into different sectors. Certainly a dominant force within the IT world.
But isn't that the problem? Is that it is the dominant force in South Africa's IT landscape?
I don't know if it's the biggest and the only player in the slice of the IT world that they play in. There's a number of competitors, some of whom have got a much larger history. Data tech is one that comes to mind immediately. So there are other players within that who are competitive, and it keeps them sharp. They have delivered earnings. Whether they'll be able to deliver earnings at the same rate, I question.
But that's why they're going off into the United States, and they're looking to list an ADR, an American Depository Receipt, on the New York Stock Exchange as a mechanism to raise funding, suggesting they want to globalize. Dimension Data did that. It was a different world, a different place, and they did it very aggressively. Is that not a big risk to EOH? It knows this market, it's brilliant in this market, it's saturated this market, but now it goes to go and do what Old Mutual and Dimension Data and everybody else blundered with over the last 20 years.
But isn't that great? Isn't that show that the company's growing? Is that a sign that the guys believe that they can actually take on the rest of the world now? I think that's a positive instead of a negative, Bruce. I think it shows you
a list of people that long who thought this in the past.
It's different than
silly.
Of course, the earnings were magical. If you think back to the late 90s, turn of the century, the IT businesses had astronomical PE ratios. Some of these companies don't exist. A number of them trade now at a fraction of what they were, be it US companies or Euro companies. If you look at EOH, it's been built on a very strong revenue model. And
so you
I think, yes, I like
so
it.
if I was to allow you to go into the time capsule, which we keep in the corner for only special occasions, and say, go back to the beginning, you can choose any of EOH, Merafe and Astral, you would stick with EOH.
Long ago, in the middle of 2014, when we had to make those choices, we chose
There we
EOH.
go. So you'll take EOH?
Yeah.
Clive Ramathibela Smith, you have been saved from the brink of self-destruction with an
Absolutely.
acceptance of EOH. These guys are gunning for 3 points in what could be a long marathon before being crowned champion. Just because he's at the lower end of the league table doesn't mean that Lavan can't win it. It is all about you. They're about to take to Twitter and start promising things that they can never deliver. So be a friend, use one of these guys' hashtags, be it a tweet or a retweet. We'll take it as a vote and we'll be counting them until Sunday midnight. These guys need your votes. So help them by following @SSO League on Twitter and vote for whichever one of these two guys you think looks nice and doesn't have a cold, or at least looks dapper and can keep their chest and tummy in at the same time. Okay, so let's just review quickly. Lavan Gopaul from Trademark Futures, Adcock Ingram, Kumba Iron Ore and Berkshire Hathway. We got a thumbs up for Kumba Iron Ore. The other two were shot down. Then Clive Ramathibela Smith from Nkunzi Investments, Astral, Merafe and EOH Holdings. Lavan held out to the last minute and he accepted EOH Holdings. He also likes the potential globalization of what's been a very successful South African business. Catch us right here on CNBC Africa next Tuesday at 8:30 for match day 17. I can't believe how fast it's going. We've had lots of fabulous scraps of bare knuckle fights before we crown a winner on the most unrelenting stock pick show on TV. Till next week, stay cunning.